Joining us right now is Allianz Chief Economic Advisor Mohamed El-Erian. Mohamed, it's always a pleasure. Thanks so much for being here.
Thank you, Maria.
A lot on the docket this morning. We've been talking about it all. First off, your reaction to these reinstatement of steel and aluminum tariffs.
Look, it highlights this tug of war that markets are having to navigate. On the one hand, trade uncertainty isn't going away. And it's not going away for a good reason, which is the rest of the world isn't doing as well as the U.S. So that means tendencies to a stronger dollar. That means tendencies to less competitive U.S. And the White House says, wait a minute, what about trade? On the other hand, we had good short-term news. The numbers out of China were better than expected. So look for this tug of war to continue. And the big hope is that policies will deliver in the rest of the world. I think it's important to stress it's about the rest of the world.
Yeah. Well, you had good news on the Chinese economy, you're right, for the Purchasing Managers Index, but you also had really good news in the U.S. Look at the shopping weekend that we just came off of. Record numbers in terms of online, cyber, and then today, of course, is Cyber Monday. It is the first trading day of December. The major indices ending the month of November with the largest monthly gain since June. The NASDAQ actually recorded its best November since 2009. So tell me about that. Would you put new money to work given all of these uncertainties and where we are in terms of the evaluations?
Look, short term, I think the outlook for the market is positive. Longer term, you have mounting uncertainty. So what I would do right now is I would stay invested but go up in quality. The key thing is that the U.S. consumer remains strong. The labor market remains strong. And all this talk of recession, and I thought that was ridiculous talk.
Yes, you did.
It's not going to happen. The U.S. consumer is in a really good place, and the U.S. consumer is the main driver of this economy.
Do you worry about capital expenditures, the fact that companies have once again started sitting on cash because of the uncertainty around trade?
I do.
Now, I will say Cornerstone Macro and Nancy Lazar, who I quote a lot, thinks that we're bottoming out on CapEx. What do you think?
So I think we are in the U.S. The major problem is not the U.S. The major problem is the rest of the world. And remember, U.S. companies serve not only the U.S. market, but the rest of the world. And it's the drag from the rest of the world. I think the main issue is to stress to Europe in particular, they need to get their act together. And they can policy-wise. I don't think it's going to happen. So it's something they can do, but it's going to take some time.
What do you want to see out of Europe? Christine Lagarde, now the new president of the ECB. What can she do to move the needle on economic growth in the Eurozone?
So she, as head of the ECB, can do very little. The ECB, I think, has already done too much. Central banks are starting to be counterproductive. What she needs to do is stress the policy handoff. And she's in a really good place. You know her well. She has an ability to communicate in a way that very few others have. And it's up to Europe to deliver more structural reforms for growth, complete the architecture of the Eurozone, and for Germany and the Netherlands, a little bit more fiscal action.
So do you think that the U.S. gets caught up in this weakness across the world? I mean, we're not living in a vacuum. How coupled are we?
So it holds us back. We would be doing more than 2% growth if it wasn't for the rest of the world, but it doesn't trip us up completely. So I'm looking at a 1.5% to 2% growth. If the rest of the world gets its act together, we can do better.
What does Wall Street think or investors think of the whole impeachment situation? Are they afraid that President Trump, or do they expect President Trump will be pushed out of office?
So I think the expectation is that if and when it gets to the Senate, nothing happens there. But more importantly, investors have been conditioned to put aside political issues. Over and over again, the right trade has been to fade political issues. Why? Most importantly, because central banks have been supportive. Now there's hope that the global economy is turning around. I'm less optimistic than most people are that we've seen the bottoming out of global growth. I think that the headwinds to China and Europe are significant. But as far as the markets are concerned, as long as central banks are supportive, we can continue what has been an amazing journey. And it's not just higher stock prices. It's also very low volatility and correlations that help you. You've made money this year, whether you've been in fixed income, risk-free asset, or whether you've been in risky asset.
Everything's gone up.
Living the dream, I call it.
We've got the jobs number, living the dream, I like that. We've got the jobs number coming out this Friday, 187,000 new jobs expected to have been as the economy in the last month. You've got a market at record highs. Is there anything on the horizon that you think takes away from the consumer strength.
I mean, what would take away from the consumer strength is a big policy mistake. A disagreement on the Hill with the White House that shuts down the government. That'd be an example of that. Otherwise, the labor market is going to continue to produce two things: new jobs and wage growth. And as long as that happens, the U.S. consumer will continue to drive this economy.
Okay, and so you would put money to work in the U.S. Do you also want to put money to work in Europe, even though the slow growth story there in terms of the economy?
No. So people are very tempted. Yeah, people are very tempted to fade the U.S. and go into international markets. Why? Because the U.S. has outperformed the rest of the world in an eye-popping fashion. I don't think we've seen numbers like that. I'm saying it's too early. Stick with the U.S. for now. Go up in quality. And have some cash available, because there will be opportunities, especially in the rest of the world, to pick up cheap stocks at good prices.
All right, we will leave it there. Mohamed, always great to talk with you.
Thank you, Maria.
Thanks so much. Mohamed El-Erian joining us there.